Welcome back to Tech Unboxed, everyone. I'm Jenny, and with me, as always, is the Wizard of Wires and resident AI whisperer, Mark.
Just trying to keep up with the silicon, Jenny. Got a fresh cup of coffee here, and I'm ready to dive into a topic that has just been dominating my brain space. We're talking NVIDIA today, and trust me, the numbers we're seeing are, well, they're quite something.
Oh, I know. It's like they've cracked some secret code, right? I mean, who doesn't hear NVIDIA and think, success? But this isn't just success, Mark. It's market conquest, isn't it? Hit us with it.
You got it. So new reports out from John Petty Research for Q2 2025 are showing NVIDIA dominating the discrete GPU market. We're talking a significant 94% market share. Think about that for a second. 94%.
Okay, wait, let me get this straight. 94%? So AMD, their biggest competitor, basically got left with the scraps? And Intel, where are they in all this?
AMD's down to a mere 6%, and Intel? They're barely even a decimal point, comfortably under 1%. It's a complete landslide. But here's the thing, Jenny. This substantial market share wasn't just about good products, though they certainly have them. It was quite influenced by something else. Tariff panic.
Tariff panic? You mean like the U.S. and China trade tensions? I've been thinking about this a lot. Why would tariffs actually boost NVIDIA's sales instead of, hurting them? That seems a bit counterintuitive.
That's the interesting part. So, U.S. export restrictions were looming, right? People knew certain advanced GPUs were going to get hit with tariffs, making them much more expensive, or even restricted, soon. So what did companies and even consumers do? They scrambled and bought everything they could before those tariffs kicked in. The market saw a 27% quarter-over-quarter surge in GPU shipments. We're talking 11.6 million units shipped in a single quarter.
So people rushed to buy, and NVIDIA just happened to have the supply to meet that sudden, massive demand? I heard about those $1 200 GPUs flying off shelves. People paid premiums just to dodge future tariffs, right?
Precisely. John Petty himself mentioned it was very unusual for a Q2. Mid-range GPUs sold out quickly, and high-end prices jumped like 15 to 20%. NVIDIA, with its deep supply chain and agile manufacturing partners like TSMC, was just better positioned. They released their Blackwell architecture GPUs, rolling out value models during this exact window, while their competitors, well, they kind of fumbled.
And that's where AMD and Intel come in, or rather where they don't come in. Can competitors recover when NVIDIA's ecosystem is this entrenched? What happened with them during this tariff-induced boom?
Well, AMD delayed their RDNA4 architecture, their latest generation, until Q3 this year, which meant they didn't have much to sell into that Q2 panic. And Intel? They launched their latest ARC GPUs back in December 2024, but they were plagued with driver instability and software issues. So, while everyone was scrambling for GPUs, NVIDIA was there, ready to take their money. It's almost like they turned a geopolitical problem into a significant sales opportunity. It was pure strategic maneuvering to some extent, coupled with a bit of market luck.
Okay, that's quite something. But let's dig into another piece of NVIDIA's secret sauce, which I think often gets overlooked when people talk about hardware. Software, specifically CUDA. Is CUDA the real MVP behind NVIDIA's position?
Oh man, Jenny, this is at the core of it. CUDA is NVIDIA's parallel computing platform. It's not just a programming language. It's an entire ecosystem of software, libraries, and tools. They've been building it for over 20 years, investing well over $1 billion. And it's created a lock-in that's quite difficult to break.
Lock-in meaning once you're in, it's incredibly hard to leave, even if a competitor offers cheaper hardware?
Exactly. Think of it like this. Over 95% of AI developers live and breathe CUDA. Their entire code base, their research, their models, it's all built on NVIDIA's platform. If they wanted to switch to AMD's equivalent, which is ROCm, they'd have to rewrite significant portions of their code. Some sources say rebuilding all your AI code could take months. That costs time, money, and expertise. Far more than any premium you might pay for an NVIDIA GPU. It's a massive switching cost.
So it's not just about raw performance of the chip, It's about the entire software environment that makes the chip usable and valuable. One developer told me switching to AMD would bankrupt his startup. NVIDIA's moat isn't just silicon, it's asterisk time and expertise.
Precisely. And with recent AI models, like the LLaMA 3.1 from April 2025, they're further embedding their tools within critical AI infrastructure. They're basically making themselves indispensable. AMD's ROCm, for instance, only supports about 30% of PyTorch models, compared to CUDA's 100%. That gap is considerable in the AI world.
I can see why that's such a powerful advantage. But let's pivot to something even more complex. The geopolitical chessboard. NVIDIA playing 4D chess with the U.S. and China. You mentioned export bans. But then they created workarounds, right?
They did. When the U.S. export bans hit, initially preventing NVIDIA from selling their top-tier AI chips like the H100 to China, it was a considerable setback. China represented a substantial portion of their revenue. But NVIDIA didn't just walk away. They innovated within the restrictions.
So they built specific tariff-skirted chips, like the H20? Paying 15% revenue to sell downgraded chips? Was that even worth it?
From a strategic perspective, yes. The H20 chips were designed to be compliant with U.S. export regulations. They had reduced performance, about 45% slower than the global models, but they still generated $8.2 billion in revenue in Q2 alone. They paid that 15% revenue share to the U.S. Treasury, which essentially allowed them to continue operating in the Chinese market. It was a clever, albeit complex, compromise.
That's quite something. But then I heard China still banned NVIDIA's workaround RTX Pro 6000D in September 2025. What happened there? It sounds like they're in a constant dance with these restrictions.
It's a constant tightrope walk. Yes, Beijing eventually banned the RTX Pro 6000D, the chip NVIDIA had designed to be China-compliant, citing national security concerns. That caused a temporary $12 billion market cap drop for NVIDIA. But even there, Jensen Huang, NVIDIA's CEO, just shrugged and pivoted again. They're still finding pathways, like their reported $5 billion investment in Intel, to work on compatibility for future server architectures. It's all about maintaining a foothold, even if it means lower margins or complex partnerships. It just shows the level of geopolitical risk they're constantly navigating.
It's wild. Imagine designing chips times specifically times for a market, and they ban them. Yet NVIDIA salvaged something like 89% of their revenue there. So what keeps NVIDIA from being burnt down? More geopolitics? Or is there something else on the horizon that could disrupt them?
That's the big question, isn't it? Their success in navigating China shows their considerable agility, but it's a persistent challenge. Looking ahead, I think we'll see discrete GPU adoption continue to rise. Industry experts, including John Petty, predict discrete GPU penetration in PCs will jump from 23% today to 31% by 2028. This is largely driven by on-device AI workloads. Think about it. Real-time language processing, advanced generative art right on your laptop, not in the cloud. That needs dedicated silicon. And NVIDIA wants to provide that.
So basically, by 2030, even your coffee maker might need a GPU, and NVIDIA wants to power all of it. It's a bit of a scary thought, how all-encompassing they're becoming.
Exactly. NVIDIA is morphing from just a chip supplier into a full-stack AI infrastructure provider. They're offering hardware, software, and cloud services. It's essentially creating a whole ecosystem where everything ties together. This makes them incredibly sticky for customers. Which brings us to some potential counterarguments. While this dominance is clear, it does come with certain vulnerabilities.
Vulnerabilities? Go on. When you have 94% of the market, it sounds pretty secure.
Well, remember that tariff panic? While it boosted sales, it also highlights their vulnerability to geopolitical risks. China's ban on the RTX Pro 6000D chip, for example, directly impacted their revenue and market valuation. So, while they're great at adapting, they're constantly on that tightrope, you know?
Right. The constant back and forth makes their success seem a bit more precarious than it appears on the surface. And what about the risk of them becoming ×2 times dominant? Does that stifle innovation from others?
That's a valid concern. Their near monopoly conditions could lead to less competition, potentially higher prices, and maybe even a slowing of overall innovation in the GPU market purely from a competitive pressure standpoint. The CUDA lock-in, for instance, makes it tough for anyone to offer a truly competitive alternative, even if it's technically strong. Developers are simply too invested in the NVIDIA ecosystem due to those switching costs. It makes you wonder how healthy this is for the broader industry, doesn't it?
It does make you wonder. So, in your view, how much of their Q2 surge was pure product superiority versus just a temporary panic ahead of tariffs? Because if it was mostly panic buying, that seems less sustainable long term.
That's a good point, Jenny. While their products are top tier, a significant portion of that Q2 surge was indeed driven by the tariff panic. AMD's RDNA 4 delay and Intel's driver issues also show that their competitors' poor performance was somewhat circumstantial. If AMD and Intel get their acts together, which they're working on, the market share could rebalance somewhat. It's not a given that NVIDIA just walks away with it forever.
So, NVIDIA, unstoppable titan or house of cards built on clever maneuvers and a bit of geopolitical tightrope walking, sounds like they're pretty well built, even with these external pressures. Don't bet against Jensen Huang, right?
Certainly not against Jensen Huang. He's a visionary. For now, they're foundational to the AI era. It's difficult to imagine anyone truly dislodging them within the next 5 years, barring something truly unforeseen, or perhaps a massive shift in how computing is done, like neuromorphic or quantum computing. But even then, NVIDIA has its fingers in those pies already. I think the big question for our listeners to ponder is, do you think NVIDIA's dominance in the GPU market is healthy for industry innovation? We'd love to hear your thoughts on that.
That's a great question, Mark. We'll be sharing that poll on our social media channels, so head over there and let us know what you think. And on that note, that was a pretty comprehensive overview of market dominance and its complexities. Thanks, Mark, for breaking down NVIDIA's not-so-secret recipe, and for raising those important counterpoints. We'll be keeping a close eye on this, and hopefully our listeners will too. That's all for this episode of Tech Unboxed. We'll catch you next time.
See ya!